Now, for example, if you have stage carriage or if you have contract carriage or if you have buses for transporting employees, then in that case ITC is available. Then we have next, which is your vehicles and aircraft. So if for vehicles and aircraft, again you need to check whether they are used for further supply or whether used in business of transportation of passengers or for in driving schools or used for transportation of goods. In all these cases, the ITC will be available, and in other cases ITC is not available. Okay. So see, these conditions are almost similar, that whether it is for further supply or not, whether it is used in business transportation of passengers or not, and whether it is used for driving schools or not. Here for vessels and aircrafts, you have one more additional condition, that is whether it is used for transportation of goods. In those cases, the ITC will be available, otherwise ITC is not available. And then we have others category in motor vehicles. So motor vehicles we have divided into three parts. First one is for transporting persons, then second is vessels and aircraft, and in third case we take all the remaining things. So here for others, remember that the ITC is available. So example, you have trucks, lorries, etc. In that case ITC is available. Then if you have any repairs and maintenance, insurance, servicing, hiring, renting or leasing, if you have any of these services related to your motor vehicles, vessels and aircrafts, then in that case, if the ITC is available with respect to these motor vehicles, vessels and aircrafts, in those cases the ITC will be available on these services also. And if ITC is not available with respect to these motor vehicles, vessels and aircrafts, then in that case ITC will not be available on these services also. So the only thing you need to remember is your these table. Okay. For motor vehicles, for transportation of person, you need to check if capacity is less than or equal to 13 including driver. Then in that case you need to check further three conditions: further supply, then used in business transportation of passengers, and driving schools. If in those three cases ITC is available, in other cases ITC is not available. Again for vehicles and aircrafts, you will check those three cases, plus you will check whether it is used in business of transportation of goods. In those cases the ITC is available, and in other cases ITC is not available. In case of others, ITC is available, there are no such conditions. And for all of these, if ITC is available on the motor vehicles, vessels and aircrafts and other vehicles, then in that case ITC will also be available on the repair and maintenance service, insurance service, servicing and hiring, renting or leasing services. Okay. And if for the original vehicles your ITC is not allowed, then again for these services also ITC will not be allowed. Then we have next section which talks about construction related. So any input services or capital goods purchased or utilized for construction of an immobile property, ITC is not available. So always remember, in case of construction for an immobile property, input services and capital goods, whether purchased or utilized, the ITC for the same is not available. It is always blocked, and we have certain exceptions to these. So in case if you have a works contract, in that case your ITC will be available, and your immobile property excludes plant and machinery. And again, plant and machinery excludes telecom tower and pipeline. So see, if you have any immobile property construction, okay, then in that case ITC is not available. But if you have construction of any plant and machinery, which is an immobile property, in that case your ITC is available. Again, your plant and machinery will exclude telecom tower and pipeline. So in case of telecom tower and pipeline, ITC is again not available. Then if the construction expenditure is charged to P&L, then ITC can be availed. Okay, so whatever is your construction expenditure, if you are charging the same to P&L, it means that ITC can be availed. So when you are charging to P&L, which means that you are not taking the depreciation for that particular asset. That is the reason ITC can be availed. Now, in case of promoter, wherever taxable, so in case of promoter, okay, wherever it is taxable, in that case, the rate applicable is 1.5% or 7.5% without ITC, and in case if your rate is 12% or 18%, that is with ITC other than your 17.5. So these are all the ITC other than your blocked credits. Then we have other blocked credits. So if you are a membership, if you are having membership of a club, a health and fitness center, except those provided by employer to employee as a statutory obligation. So in case if you have membership of club or health and fitness center, and this is not provided by employer to employee as a statutory obligation, then in that case also the ITC will be blocked. Then next we have travel benefit to employee on vacation except those provided by employer to employee as a statutory obligation. So if you are getting any travel benefits, okay, as an employee on vacation, other than the ones which are provided by your employer as a statutory obligation, in that case also we have blocked credits. Then food or as beverage, food and beverage, outdoor catering, beauty treatment. So on these things also your ITC is blocked: food and beverages, outdoor catering and beauty treatment. Now we have certain exceptions over here. So if you have any inward supply and outward supply are same, okay. So if your inward and outward supply are same, then in that case ITC will be available. And if the employer is providing to an employee any of these food and beverage, outdoor catering or beauty treatments as a statutory obligation, in that case ITC will be allowable. Then any inward supply used for personal use. So if you are using any of the inward supplies for your personal use, then you cannot claim ITC on the same. And goods stolen, lost, destroyed, written off or disposed by way of gift or free sample. So if you have any goods which are stolen, lost, destroyed, written off or disposed of by way of gift or free sample, in that case also please remember ITC will not be allowed. The credit will be blocked for these items. And if you are using any inward supplies for CSR activities, in that case also your ITC will be blocked. Alright, so that's it. Let's come to the questions part. Okay. So question 1 says, enumerate the conditions necessary for availing ITC under GST law. No registered person shall be entitled to the credit of ITC in respect of any supply of goods or services or both to him unless he is in possession of tax invoice or debit note or such other tax paying documents as may be prescribed. So he should be having the tax invoice, the debit note or any other tax paying documents which are prescribed under the GST law. Then he should have received the goods or services or both, and the supplier has actually paid the tax and charged in respect of the supply to the government. Okay, so whatever the supply is there, the supplier should have actually paid the taxes to government, then only you can claim the ITC for the same. Then your return under section 39 should have been filed properly. The details of invoice or debit note in respect of said supply has been furnished by the supplier in the statement of outward supplies. So GSTR 1 should be properly filed and these details should be communicated to the recipient to have such invoice or debit notes in the manner as is prescribed under section 37. Okay, let's come to this question number 4. Messrs. Sri Durga Corporation Private Limited is a supplier of goods and services at Kolkata. It has furnished the following information for the month of February. We are given these transactions, okay. So first one is intrastate sale of taxable goods including 1 lakh received as advance in January The invoice for the entire sale value is issued on 15th of February, which is 4 lakh rupees. Then goods purchased from unregistered dealer on 20th February. Interstate purchases are worth 30,000 and balances are intrastate 1 lakh. Services provided by way of labor contracts for repairing a single residential unit otherwise than as a part of residential complex. It is an intrastate transaction 1 lakh. GTA services, GTA is paying at the rate of 12% and it is interstate transaction 2 lakh is the amount. Compute the net GST liability of Mrs. Sri Durga Corporation Private Limited for the month of February. And the rates of GST we are given CGST 9%, SGST 9% and IGST 18%. The turnover of Messrs. Sri Durga Corporation Private Limited was 2.5 crores in the previous financial year and all the amounts given below are exclusive of taxes. Kindly calculate the GST liability for this. So see, let's check the answer. Computation of GST liability of MS Sri Durga Corporation Private Limited for the month of February. So first one we had was our interstate sale of taxable goods. Now remember these including 1 lakh which is received as advance in January. But since the invoice for the entire sale is issued on 15th of February, so in that invoice only this entire value will be considered and GST liability will accordingly arise on 4 lakhs amount, which is coming to 36,000 as 9% CGST and 9% SGST each. Then you have goods purchased from unregistered dealer. So since these are the goods from unregistered dealer, they are exempted from any reverse charge liability without any upper limits, okay? And this was a notification dated 28/6/2017. So as per these notification, we will not be charging any taxes on these goods from unregistered person under RCM. So that is the reason our output liability will be nil for this. Then you have services rendered by way of labor contracts for repairing a single residential unit, otherwise than as a part of residential unit, and the charges applicable for the same is 1 lakh rupees. So on these 1 lakh also GST at the rate 9% each will be leviable, CGST and SGST. And then you have GTA services received from goods transport services received from GTA. Remember this is services which is received from GTA, and as given in the question, this GTA is paying tax at 12%. So since the GTA is paying tax at 12%, so RCM is not applicable. Okay, the GTA would only pay taxes under forward charge mechanism. So in that case, we do not have any tax liability. So our total GST liability for the month of February comes to 45,000 CGST and SGST each. Now let's check for any input tax credit that we will be allowed. Okay, so yes, we will be allowed this ITC on this GTA services. Okay, so 2 lakh rupees and 12% is the rate which is given. Since they are paying under FCM under 12% rate, so 24,000 GST liability we will be allowed. Okay. So the net GST liability for the month of February would be 21,000 CGST and 45,000 SGST. Okay. Then, okay, we are given some notes. See what it says. Section 12 of CGST Act 2017 read with notification these dated 15/11/2017 provides that the time of supply for all suppliers of goods excluding composition suppliers is the time of issue of invoice without any turnover limit. So whenever if you have any supply of goods wherein the goods are received in parts, in that case the time for the entire supply will be the time of issue of that invoice. So that is the reason the liability to pay tax on advance received in January will also arise in the month of February when the invoice for the supply is issued, and that is the reason we have taken that also in the calculation of February month. Then all interstate and interstate procurements made by a registered person from unregistered person have been exempted under reverse charge liability, okay, from this notification. So using that we have not taken any charges on that. Then services by way of pure labor contracts of construction, erection, commissioning or installation of original works pertaining to a single residential unit, otherwise then as a part of a complex residential complex, are exempt with this notification, and labor contracts for repairing are thus taxable. Then as per the notification dated 28/6/2017, GST is payable by the recipient on RCM basis on receipt of services of transportation of goods by road from a GTA provided such GTA has not paid GST at 12%. But in our case, we were given that GTA has paid 12%, so that is the reason RCM provisions will not be applicable. And input tax credit is available for the services received from GTA. So we have taken that input credit of IGST, CGST and SGST. Okay. Then question number 5. Tirupati traders, a registered supplier of goods, pays GST as the case may be under regular scheme, and it is furnished the following particulars for a tax period. You have value of interstate supply of goods 12,000 and value of interstate purchase of goods you have 10,000. Then rates of CGST, SGST are 9% each, and for IGST we have 18%. Both inward and outward supplies are exclusive of taxes wherever applicable. All the conditions necessary for availing the ITC have been fulfilled. Compute the net GST payable by Tirupati traders during the given tax period, assuming that there is no opening balance of ITC. And Govind, a registered supplier, is engaged in providing services in the neighboring states from his registered office located in Mumbai. He has furnished the following details. So we have other details and we are given the rates. Compute the net GST payable by Govind during the tax period and make suitable assumptions if necessary. So please calculate this question. Okay, so let's see the answer. See, GST payable on interstate supply of goods. Being an interstate supply, GST, CGST and SGST will be payable. So, see, the first one we had value of interstate supply of goods 12,000 and second we have 10,000. Okay. So, on these, this 12,000, first we will take 9%, 9%, which will come to 1080 each. Then you have ITC on intrastate purchase of goods. Okay. So second that we are given is value of interstate purchase of goods. So on these 10,000 we will be allowed to take the ITC. So on 10,000 9% each comes to 900 rupees. So the net GST payable will be 180 rupees CGST and SGST. Then computation of net GST payable by Govind. Okay, so you have this interstate supply of services. So since that is an interstate supply of services, see this we are given 1,80,000. So on that IGST at the rate of 18% will be leviable, and then we have receipt of goods and services within the state, that is your intrastate receipt. So let's check what we are doing. So IGST at the rate of 18% will be paying on this interstate supply of services. Okay. So on 1,80,000 at 18% comes to 32,400. Now from that we will reduce the ITC of CGST at the rate of 9%, which is paid on intrastate receipts of goods and services, that is on 1 lakh rupees 9% comes to 9,000, and you have ITC of SGST also on that 1 lakh rupees 9,000 again. So the net GST that will be payable in cash in this case will be 14,400 rupees. Now come to question number 8. Okay. So see, A Limited procured the following goods in the month of December. Goods used in constructing an additional floor of the office building 18,450. Goods given as free sample to prospective customers 15,000. Trucks used for transportation of inputs in the factory. Remember, on trucks ITC is available. Then inputs used in trial runs and confectionery items for consumption of employees working in the factory. And you have cement used for making foundation and structural support to plant and machinery. So now please compute the amount of ITC available with A Limited for the month of December by giving necessary explanations. Assume that all other conditions necessary for availing ITC have been fulfilled. So all of you please calculate these, what will be the ITC that will be allowed. Please excuse for a moment. So see here what they are saying. Goods used in construction and of an additional floor of office building. So if you have any goods which are used in construction of additional floor of office building, now ITC on goods received by a taxable person for construction of an immobile property on his own account is blocked even if the same is used in course or furtherance of business. Okay, so that is the reason any additional floor which is a part of your immobile property construction on its own account and the cost will be capitalized. So in that case your ITC is blocked. So for this first one we will not have any ITC. Okay. See. Goods used in construction of additional floor of office building. ITC on goods received by a taxable person for construction of an immobile property on his own account is blocked even if the same is used in the course or furtherance of business. So now what we have assumed here is that the cost of construction of these additional floor that would also have been capitalized, and in case if any of the cost of your asset is capitalized, then the same for the same asset you cannot claim the ITC. Then goods given as free samples to prospective customers. So here we know as per the provisions that ITC on the goods which are disposed by way of free samples is specifically blocked. So here again we will have no ITC. Then for trucks the ITC is applicable. Okay, it is allowed. So for trucks you will have allowed. Okay, the value we are given is 11,000. This is the value of GST that we are directly given. So these 11,000 will be allowed. Then you have these inputs used in trial runs. Okay. So since they are used in your trial runs, which means that it is done for the course or furtherance of business. So in that case, this will be allowed. Then confectionery items will come in your food items. So for that you will not be allowed. Okay, and this is not any statutory obligation that the employer needs to fulfill. Then cement used for making foundation and structural support to plant and machinery. So if you are making any foundational structure, then that will also be form of your that will also become part of your plant and machinery. And for plant and machinery, the ITC is allowable. So again, this ITC will be allowable. Okay. Okay. Now come to question number 10. K&K Limited, a registered supplier of Mumbai, is a manufacturer of heavy machines. Its outward supply is exclusive of GST for the month of January are as follows. So interstate supply it is 85 lakhs and interstate supply it is 15 lakhs. Now applicable rate of CGST, SGST and IGST on outward supply are 9%, 9% and 18% respectively. Then details of GST paid on inward supplies for the month of January. So on raw material A, of which 70% inputs were used and 30% were in stock at the end of January, 60,000 each. For raw material B, 90% is received in factory and remaining material completely damaged due to road accident on the way to factory, and there was no negligence on the part of K&K Limited. For that we have CGST and SGST as 50,000 each. Then construction of pipelines laid outside the factory premises 30,000 each, and insurance charges paid for trucks used for transportation of goods 55,000. Now remember, for trucks we are availing ITC. So in that case the insurance charges for the trucks they will also be allowed ITC. Now there is no opening balance of any ITC and all the conditions necessary for availing the ITC have been fulfilled. Details of GST paid on inward supplies are available in GSTR 2A except for item raw material A, for which the supplier has not filed its GSTR 1 for the month of January, and so the corresponding ITC is not reflecting in GSTR 2A of K&K Limited in January. And you need to compute the amount of eligible ITC available for the month of January, the minimum net GST payable in cash for the month of January after using the available ITC and working notes. So please calculate this question. Okay. So see, computation of amount of eligible ITC available for the month of January. So on raw materials B, we will take only 90%. Why? Because see, ITC on the goods which are destroyed is blocked. So we had seen that 90% only could reach, the 10% was blocked. So whatever goods are destroyed on that, ITC will not be allowed. So we are taking only on 90% value. Now the bill we have is 50,000. Okay. So 50,000 you do first 90%. Okay. So only on 45,000 value we will be allowed the this ITC. Then construction of pipelines. So pipelines are specifically excluded from ITC. Okay. The ITC for pipelines is blocked, so that will not come. Then insurance charge is paid for trucks. Now since the trucks, for trucks ITC will be allowed, so any insurance charges that we are paying for the trucks, for that also the ITC will be allowed. So 50,000, 55,000 each will be allowed here. Then raw materials for A, where invoice has not been uploaded. Okay, so the supplier has not uploaded invoices in GSTR1. So in that case, the 10% of eligible ITC available in respect of uploaded invoices can be claimed by the recipient. So only 10% of eligible invoices could be claimed, other cannot be claimed. Okay, and see here what has happened. They have not uploaded the GSTR form. So in that case, see, where is it? See this. GST paid on inward supplies are okay. No, this is additional information, but okay, where was that given to us? Alright. Then next you have eligible ITC on invoices, the details of which are available in GSTR 2A. So in GSTR 2A only 1 lakh rupees, okay, this 45,000 and these 55,000. For these only you have the invoices which are available. So on these 1 lakh rupees will be your eligible ITC. Then ITC on invoices or the details of which are not available in GSTR 2A. Okay, these invoices they are not uploaded. So for that only 10,000 is the allowable limit here. Okay, see. Details of GST paid on inward supplies are available in GSTR 2A except for raw material A, for which, so apart from raw material A, for every other thing the GST invoices are properly filed in your GSTR1, and they are also reflecting in your GSTR2A. So now see, we have this one provision which says that where invoice has not been uploaded by the supplier in GSTR1, then 10% of the eligible ITC available in respect of the uploaded invoices can be claimed by the recipient. So 10% of these 1 lakh, that is 10,000 of ITC you will be allowed to claim. So your total eligible ITC is 1 lakh 10,000 each. Now, computation of minimum GST payable in cash for the month of January. So, see, we are given this, yes, interstate goods for 85 lakhs and interstate for 15 lakhs. Okay, so we'll compute the GST on that. Now, since these are interstate outward supplies of 85 lakhs, the GST at the rate of 18% comes out to be 15 lakh 30,000. Then you have interstate supplies, which is 15 lakhs. So since this is interstate, you will have CGST and SGST. So on 15 lakhs, CGST and SGST each at the rate of 9%, which comes out to be 1 lakh 35,000. Now your total output tax payable will be 1 lakh 35 CGST, 1 lakh 35 SGST, and 15 lakh 30,000 as your IGST. Now see, we have calculated the eligible ITC, CGST and SGST 1 lakh 10,000 each. So that I will be setting off against my these output liability, and the remaining balance I'll be paying in cash. So the minimum net GST payable in cash comes out to be 25,000 CGST, 25,000 SGST, and 15 lakh 30,000 IGST. Now, question number 12. Fun Pharma Private Limited, a registered supplier, is engaged in the manufacture of taxable goods. The company provides the following information of GST paid on the purchase made, input services availed by it during the month of September. So, you are given the purchase of cabs used for transportation of its employees 3,30,000. Then inputs consisting of 3 lots, out of which first lot was received during the month 1,25,000. Then you have capital goods. Out of 3 items, invoice for 1 item was missing and GST paid on that item was 25,000, and the total invoice value we are given 2,50,000. Then you have outdoor catering service availed on Women's Day 72,000. Determine the amount of ITC available with Messrs Fun Pharma Private Limited for the month of September by giving necessary explanations for treatment of various items, and all the conditions necessary for availing ITC have been fulfilled. So please calculate the ITC which will be allowed in this particular case. Okay. So see here we have purchase of cabs used for transportation of its own employees. Okay. Now since this person is manufacturer of taxable goods. Okay. So these cabs, they are not used for the purpose of further business. So that is the reason the GST for this will not be allowed to be claimed as ITC. Then you have inputs consisting of three lots. So see, whenever you have any goods which you are receiving in installments or which you are receiving in lots, in that case ITC will only be allowed when you are receiving the last goods of that particular lot or that particular installments. So here what they have given to us is out of which first lot was received. So now since you have received only first lot, this entire amount of GST paid will not be allowable as ITC to be claimed. Then you have capital goods out of three items. Invoice for one item is missing. So whenever you have any missing invoice, you cannot avail the ITC for the same. So here the value is 2,50,000 of GST and they are saying that the item which was missing, GST paid on that item was 25,000. So for these 25,000, the ITC will not be allowable. So on remaining balance amount of 2,25,000, out of this 2,50,000, ITC will be allowed. And outdoor catering services. Now outdoor catering services, on that ITC is specifically blocked. So this 72,000 is again not eligible for claiming the ITC. C. Purchase of cabs used for transportation of its employees nil. Inputs consisting three lots out of which only first is received, so nil. For capital goods, as I told you, 25,000 on 25,000 amount, ITC not available out of 2,50,000. So ITC allowable only on 2,25,000. Then catering service will not be allowed. So the total ITC that will be allowed in this case will be 2,25,000. And we have written the reasons for the same. Okay. Section 17 of CGST provides that ITC on motor vehicles can be availed where they are used for making taxable supply of transportation of passengers if the taxable person is in the business of transportation of passengers. So here the supplier is a manufacturer of goods, so that is the reason this person cannot avail credit on cabs used for transportation of its own employees. Then when inputs are received in installments, ITC can be availed only on the receipt of the last installment. Then ITC cannot be taken on missing invoice. The registered person should have the invoice in its possession to claim the ITC. And ITC on outdoor catering is specifically disallowed unless the same is used for making outward taxable supply of the same category as on an element of the taxable composite or mixed supply in terms of section 17 of the CGST Act. If you have any doubts or if you want to discuss anything further, you can find the numbers, WhatsApp numbers given in the description. You can join there and reach out to us for your doubts. If you would like to have these materials or any other things, again you can reach out on those WhatsApp numbers given in the description box. So this was all that we had today for ITC. I hope you liked this session and we would be happy to receive your feedbacks in the comments below or on the WhatsApp numbers provided in the description links. So that's it for today. Thank you.